Hi, everyone, and welcome from Las Vegas again.
Once more.
To our second episode. We're still on the same day, so don't worry.
Yeah.
Usually we change shirts between days, at least once a week.
I mean, basically, we just changed jackets. Or
We
could have
exactly, yeah.
We
Yeah,
could have changed the handkerchief.
Exactly, yeah. Oh man,
Yeah.
hilarious. I think last week we talked about vision of finance, the need to transform. Why do organizations need to transform? What is the difference between a finance transformation, business transformation, etc.? Today we want to get a little bit more meat on the bone, or make it a little bit more granular on that aspect, in the sense of, well, there is a difference between companies, right? And if you find a common denominator across accounting or finance organization, the common denominator is most likely to be industry specific, right? And in certain industries, they can do a lot of stuff on one technology platform. Others, they need to look at a very different setup because they operate in a very different way, or different industry, different business model, etc.
Or maybe they have multiple business models.
Or they have multiple.
Absolutely.
Could be the case, right? It's a norm for probably all companies that they have more than just one business model. But anyway, today we want to talk a little bit about enabling technologies for a specific group of industry. Which one are those?
I think maybe before we get to the enabling technology, just one thought I had when you were explaining that, linking back to the last episode, because we talked a bit about the vision, right? And the first thought I just had now was really this idea about, if you have this vision, what is the next step afterwards, right? And I think enabling technologies is, of course, one, most likely the biggest topic. But at the same time, I think it's really important to always understand how do you get there? I think the question of how do you actually realize that vision as a CFO, as someone in the office of the CFO. And I think that then basically becomes your strategy, your plan, your battle plan, whatever you want to call it, that actually helps you to get there. And I think within that battle plan, it's a specific number of measures, and one of them, if not many of them, will be heavily influenced by technology. And I think maybe just that as an additional thought, kind of like from a 30,000 foot point of view, I think that's just really like this why is this so important, right? And when we think about enabling technologies, I think, man, particularly in the last couple of episodes, we talked about ChatGPT, so general, let's say, AI.
Stay tuned for that. Amazing stuff.
And as one idea, of course. And I think, of course, AI is one topic. Robotics has been almost common nowadays, I would say, in a lot of organizations, as another enabling technology. The ERP as the central backbone of how finance and ultimately how the company operates is another key, crucial technology there as well. So I think that's the first three that really come to my mind off the bat. Do you have anything to add to those?
No, I think technology is one enabler, and the other ones are people, processes, etc.
All right,
But you can change people only to a certain extent, right?
Yeah,
so there is a limit to that. You can reskill, you can reorganize, etc. Probably similar to, processes are probably a little more flexible in theory. If you design them on paper, right, they can go any way you want them to go. But technology is the driver probably that can influence all of them, right? So technology influenced my life, right? So if I remember 20 years back or 10 years back, we didn't have that opportunity, right, to basically live stream from Vegas. We didn't have mobile phones 20 years ago, really? No, maybe. Probably not. No.
When was the iPhone introduced? 2007?
2005, 2006.
I think it was 2007.
When was the World Championship of Soccer in Germany?
Oh man, I'm not a soccer. I'm not a soccer guy.
27 probably. I had a manager once who was like, whenever there was like a keynote to give, and he was like, "Oh yeah, do you remember that World Championship in Germany? Do you remember the photos or the iPhone photos you took back then?" Oh yeah, really? Because actually the iPhone was introduced a year later. So the line is blurring, right? So we don't even remember a world without a mobile device. But so technology is changing the behavior, or supports the behavioral change, and it supports the creation of new business processes. But of course, you need to, it's not just buying software and implementing that. You need to change people around that, right?
Absolutely.
or just buying an iPhone and downloading apps, that doesn't make anything better, right? It will just clutter your device, and your cost of subscriptions will skyrocket. It will skyrocket. So there needs to be more a little bit around. But today we want to talk a little bit more about the enabling technologies. So if you, we are aware of all the other stuff around there.
Can I just, sorry for interrupting you, but I think just one thing that I still wanted to add, because I really love that view of maybe we can speak about enablers on a higher level, right? And you mentioned, of course, technology, and we'll go a lot deeper there in a second. And people absolutely love that. Couldn't agree more. I would actually even add a third one, the more I think about it. And obviously I've done quite some organizational projects in my past as well. But I think this organizational setup, kind of like the target operating model, is one of the key enablers from my point of view as well. And let me just briefly explain what I mean by this, and then we can go to the technologies. I think when we think about the organizational design, right, I think that's nothing new. That's been around for, let's say, 15 or 20 years. The idea of shared service centers, basically centralizing certain activities and services like finance, like accounts payable, accounts receivable, and anything that can be centralized in a meaningful way, right? That's been nothing new. However, I think what I really see in the recent years is that either coming back to this vision, the target operating model or the setup from an organizational perspective doesn't enable this vision anymore. Just as an example, sometimes companies, they try to centralize something that doesn't make a whole lot of sense for that specific business model. Or the other way around, they actually don't centralize something that could very well be centralized. So I think there I also see quite a leverage, quite a lever in terms of how do I enable getting to my vision, because that's what the enabler ultimately are about, right? So just adding on this, I think organization there is also like this target operating model is a really good addition there as well, next to technology and people.
Correct. If you have that operating model, and usually you have that in form of a pyramid, right? You have three levels of that. Basically, you have your operational level, where you do like your daily tasks, your daily routines, your daily processes,
all the mass transactions.
Correct. You got your tactical level, where you're more like, well, let's review, let's reschedule, let's optimize of what's below. And then you have your strategic level, where you come up with ideational stuff, where it's more influencing, where it's more influencing other parts of the organization. Here comes the trick now. On level 1, the operational thing, that's a process. Processes can be rule-based. Rule-based equals automation. So it's as simple as that. So you have your tactical stuff that you need to review stuff, or you need to deal with exceptions. That's autonomization. That's machine learning, right? You can put technology behind that as well. And on the strategic stuff, I mean, we all had our scary moments with ChatGPT over the last weeks, right? If they came up with new ideas or stuff. So I wouldn't say that you can drive that completely with technology today. You can probably support it, but there is a clear direction of what technology is going to be capable of. And then you are in the situation, you have the pyramid. Of course, you always wanted to flip that pyramid, right? And enable everything with technology. And the real world is getting closer to the aim of that targeting operating model, right? That has been around for 40, 50 years. So it's not a new idea, basically.
But I think it also really shows how closely interlinked these different enablers are, right? Because you will need technology to kind of fuel your target operating model and to kind of breathe life into it in the widest sense, right? And at the same time, the people actually sit in the organizations using the technologies. So I think that just really shows how closely interlinked all of these dimensions are. Love it. I think that's definitely the way, ideally, a finance function actually looks at that when looking at the vision and how to achieve it. Totally.
Then let's probably make it a little bit more tangible and come to the first industry. I mean, you have a certain background in a certain industry. Probably let's take this one. If you look at a very, very people-based industry, consulting or professional services and finance, how does that usually work? How are they interlinked? What's the modus operandi or way of working there?
I think that the reason why I'm laughing is because you speak of interlinkages, right? Or what we just talked about. And I think very often what I still see is this typical siloed point of view, right? Like if you think about a typical professional service company, there's projects that actually need to be delivered to clients. There's people delivering these projects. They have certain cost rates. They have certain billing rates. So basically, they cost you a certain amount of money per hour, and they actually bring in a certain amount of money per hour. And I think what I often see, the questions that people from the business, like a project manager, I was a project manager, for instance, actually delivering projects, the questions you tend to have, they are what I often call, the questions themselves are very integrated. What I mean by this is, I don't have a very isolated, siloed question like, has invoice X been paid by client Y? And when has it been paid? Has it been paid in full? I might have this question as well, but very often the questions I have, they're a lot broader. They're a lot more integrated. And by integrated, I just mean they have a lot of different components to it. Let me give you an example. If I, for instance, want to do the billing for a certain project, I might ask, hey, has everyone done their homework? Has everyone booked their hours? Has everyone booked their expenses actually in time? If I actually have the invoice created now, are really the rates going to be used that I agreed upon with the client in the contract, right?
The initial offer even, yeah.
Oh, exactly, or even the initial offer, so right? And when you think about these, this sounds very simplistic, but at the same time, what I know and what I've seen and what I've seen in a lot of professional service companies is that you have one tool that does time entries, we have one tool that does the expenses, you have a completely different finance tool that actually does the billing around it. But very often then the actual contract with the customer is in a different system again. So all of a sudden, what was my reality as a project manager? Well, it was Excel at the end of the day. You have data extracts from multiple systems, and you try to come up with the actual outgoing transaction. And the interesting thing about this is, linking this back to what I said before, you have an integrated question that spans multitude of different elements. But interestingly enough, the actual systems, the technology that you're using, coming back to these enablers, is not integrated at all, or only poorly integrated sometimes. And I think that's really what's kind of like driving the scenario. And when we come back again to this vision, this ultimately means you're losing money, because the people that are supposed to be productive on projects all of a sudden need to spend hours, sometimes maybe even days, to come up with these administrative or do this administrative tasks. And I think that's really something that I see is really still a huge topic in that industry. It's not the only one, of course, but one of the components that is really relevant.
Yeah, I mean, professional services, what's so intense about that industry is the business model is based on people's lifetime, right?
Oh, hell yeah. That's more true than I would like it to be.
Yeah, you monetize people's lifetime, right? And power to the people and stuff. But as it's the ultimate people-based business, I had one CFO once who said like, oh, I'm the CFO, yeah, I'm running accounting, I'm running budgeting and planning, etc. But actually, we have like 100 warlords here, and all of them, they have their 13, 15, 20 warriors or minions, and they are calling the shots, right? Because you mentioned, well, if they're not happy, they pull out, they go somewhere else with their troops, right? So it's hard in terms of decision-making structure or power structure to run such an organization, because it's always based on compromise or politics.
And I actually think it's the same in every single company. The people who bring in the money and the salespeople, or in this case, obviously in professional services,
there is a mix,
very often it's the actual people doing the projects who also bring in the money, because technically they are the money, if you will, right? They have the most power, and I think that's exactly what you just described. Totally.
But it's also, you described that great, right? If you look at the lead to cash process, which is probably always the unique process for every industry or organization, has many different touch points, right? You think of a lead in a professional service organization, well, I don't know. Is there a lot of cold calling going on at the Big Four company?
Oh, no.
Probably not, right? So there is probably a partner who knows someone who likes someone who plays golf with someone, right? And that's how it probably starts. And you pitch, you create pitch deck, you create probably an offer, which is most often PowerPoint, but you need rates from your consultants. if you send out an offer, hopefully you also are aware of the cost of those consultants or the utilization or target utilization. So you need a lot of information from different data pods, right?
Yeah.
And then crunch them together in PowerPoint.
Yeah.
So that doesn't sound too efficient, right?
Yeah.
And then hopefully after signing, it goes the way of, well, you travel there, or you do it remotely. You do those hours, you have to apply the rates. You probably need approval from your customer, because why the hell did some person build like 25 hours on a day, right? How can that happen? All that fun stuff. Till it ultimately derives into an invoice. And then the question is, what kind of project is that? Is it time and material? Is it fixed fee? Is it just people's time? Is it also expenses? Is it additional subscriptions? So many consulting companies are evolving in the sense of, let's not just monetize our people's life here. Let's also, I don't know, cross-sell stuff or sell software.
Or actually just really coming up with completely new business models. I think that's one of the huge trends that I see in the industry, is actually how do we move away from the lifetime that we kind of need from the people in order to make money? How can we basically, just as an example, build digital assets that are recyclable, right? Like, let's say 7 years ago when I started in consulting, and I'm pretty sure 10, 15, 20 years ago as well, you basically sort of did a very similar project dozens, if not hundreds of times a year in multitude of different departments, if you will, in the company. So isn't it smarter if you found a way how to standardize this, maybe use technology in order to build a workflow, for example, to cleanse master data, to transform it, to then make some kind of report that a lot of different clients are looking for. And instead of doing the same project with people over and over and over again, why don't I build a digital asset around this that I then basically, like a SaaS company, kind of
sell it off the shelf.
Exactly, sell it off the shelf. And that is something I think that will revolutionize is a huge word, but I think it will bring in a lot of different momentum at a lot of the companies, because all of a sudden they almost need to think of like a tech company rather than just a professional service company. And that's one of the trends that I think will really, all of a sudden your business model is completely different with all of the consequences that it brings for revenue recognition, for billing, for how you actually interact with clients. And I think that's a really, really interesting kind of point of view. How do you include these changing and new business models in your own?
Yeah, I remember. So a couple of articles a week ago, I don't know whether it was BCG or McKinsey now partnering up with ChatGPT and developing stuff. So all of a sudden you don't just need like fancy people in suits creating PowerPoints. You also need prompt engineers. So that's a funny development.
Yeah, absolutely. Yeah. But maybe coming back to, because that's still something that goes through my mind when we come back to these enablers, right? Like the technology, because you already mentioned ChatGPT, and I think closely linked to that as well to a certain extent is robotics for me personally, because both have something to do with automation or taking the robot, if you will, kind of out of the human being. What's your point of view on this? Maybe
on robots or
on these technologies, maybe not just for the professional service industry, but also, for instance, tech and media or all the industries at the end of the day that actually have these technologies. What is your point of view on how this will change, or maybe has already changed the office of the CFO in the past with AI and robotics?
Yeah, there are a lot of buzzwords in that. So technology and probably let's just boil that down to technology and finance. I think finance, if you can generalize it, is kind of a little bit late to the technology party. If you look,
amen.
Maybe I should license that quote.
I think
finance is late to the technology party. Now, if you think of just the corporate function or the corporate world and the way they adopted technology over the last years, probably the first one's Salesforce. So everything sales related, CRM, marketing was pretty early on. I mean, the production as it's just your organizational unit. That was kind of the reason an ERP vendor in Germany came to birth. So these were always segments who were pretty early on in adopting stuff, probably also because they're revenue generating or at least closer to revenue generating in an organization than finance. So what I feel is that's a little bit lagging behind in most organizations, the finance department.
Yeah.
Not speaking of planning. So if your finance equals accounting, and then planning is a little bit different because you're dealing with the future, you're trying to adopt stuff, and plans usually tend to become more complex over time, or the more time you spend on planning, the more complex it will get. And technology, well, is one way of handling complexity. But the finance organization is late to the party. Now everyone is a little bit awake now in the light of the recent developments, or time spent at home during the pandemic, and realizes, oh well, everyone else in the company has fancy tools to play with, right? The pressure is growing on finance to do new stuff or change roles, and technology is becoming increasingly an enabler for that. But back to how does finance deal with it? I think today large enterprises, they've adopted more technology. Small companies, not yet. What I see there is small companies usually are more open to look at new technologies and adopting that. There you have more of a budget restriction topic, right? So what large enterprises don't have, or there is more available budget, or
totally.
there is a sensitivity to budget. Small companies probably have less of that. So there is a restriction there. And hence, in smaller organizations, you have the tendency to go for broader platforms instead of a best of breed approach of let's take the best of AI and glue that together with the best of there and all that kind of stuff. So robotics, or RPA, which is probably one example of, I would see it more of a best of breed or bolt-on solution, where you probably have a platform or a dysfunctional platform or a couple of platforms that need to be interoperable. You make it easier with robotics. Don't see that for smaller companies. So robotics is probably, how do you sell it? It's just a temporary solution probably to certain use cases.
It's kind of like a first aid, but it's not like the final treatment necessarily. Exactly, it's like a band-aid. Absolutely,
it's like automation, but it went wrong at some point. So I use a robot for that.
I think that's a really interesting kind of point of view, because it corresponds to, in many ways, to what I've seen in the past as well. And that is that a company originally says and thinks, hey, how do we automate a certain process? Because we want to make it more efficient. But exactly like you said, very often it's a band-aid, because the underlying structure, so for instance, the ERP system or the organizational structure or the process is maybe not set up in the best way it potentially could be. So it's kind of like a band-aid. It's like a quick fix, right? Just to automate it, then it needs less capacity and it's done. The interesting thing is, very often what I've seen is when this is implemented in a smart way in a company, all of a sudden a lot more people start to think about it. Oh man, now that I've seen what this can do and what this technology can do for me personally, I have like a list of different ideas how we can actually use this. So very often what I've seen, particularly in larger organizations that don't have set up a certain governance structure about, for instance, robotics, all of a sudden you have dozens without any clear understanding of what does what. So the process is automated, but all of a sudden it's very, very difficult to keep track and an overview of what do they actually do? How do they work specifically? Because all of a sudden something slightly changes at one point somewhere in the process, and all of a sudden the robot doesn't work anymore. And I think that's similar like to a lot of people from the controlling departments will know. If you have incredibly complex Excel sheets with VBA macros and everything, the second you have an issue and something changes and you need to all of a sudden really kind of like open the hood and sort of repair the engine, if you don't know every single nook and cranny of that engine, you will really have troubles fixing it. And I think that's what a lot of companies then actually run into when thinking about robotics, because it is this band-aid, and I wholeheartedly see that it has its place also in the future in transformation, because I think you will never have a system, and I'm not only talking about IT systems, but systems in terms of companies at the end of the day that really optimize this in a way that you would never ever use robotics. But it's totally just this band-aid.
It's the result of a poor system design, I think. Because it's you need a robot, or a robot is just an automation for stuff that where someone needed to click some stuff, or need to insert data that can't be interfaced, or goes through an API. You need a robot accessing the system, putting in that stuff and clicking OK.
Yeah.
And then, so it's a bandit to operate to automation. But I think coming back to the real definition of terminology, it's crucial nowadays, because you will see a lot of fancy buzzwords floating around, ML, AI, automation. Today I heard a term ML automation. And probably it's just, to me, I spent too much time at university, but automation for me is it's a process, it's rule-based. So if then, then,
absolutely.
if then,
yeah,
that's automation. An ML or AI, just to make it super simple, is, well, if then is just makes sense to a certain extent, because otherwise you need to deal with exceptions, and you end up with a gazillion if then. Doesn't make too much sense. So in order to deal with exceptions, you install a system that learns that stuff, dealing with exceptions, and is autonomous.
Yeah.
You have automation or automation system or autonomous system who can drive on their own.
Yeah.
An autonomous automation that doesn't exist in my world yet. Probably I don't understand everything.
I think you could do a PhD in it. No, because I really like the way you think about this. But I think that's true, because that's completely different dimensions to how to actually look at that. So absolutely,
yeah. But it's a step in a journey, right? So and that's probably what finance needs to learn as well.
Yeah.
If you look at you need to digitize processes first, and everything is digital, basically. You don't need to digitize anymore. If there is a salesperson coming to you telling you need to digitize, well, dig deeper on that, right? Yeah. Because your Excel spreadsheets are digital, right? So it's more around harmonization, putting that on a platform, structuring it, and then automating that.
Yeah.
And well, if it's a good system, probably don't need RPA.
Yeah.
And then you should move into how can I make that more autonomous prospectively, because AI or ML, all those autonomous systems, they need time, right? It's like it's a little bit like a child, right? So they need time. ML needs time to learn. And if you think about learning, well, if you learn, make mistakes, right? So car is gonna crash against the tree, right?
But I think, talking about mistakes, I think that's exactly what a lot of people realized. And for instance, with ChatGPT, because how do you get kind of like the errors out of there in terms of actually recognizing, hey, this is not correct, because it's basically just based on, I don't know, trillions of data points at the end of the day, and extrapolating, statistically speaking, what is the most probable answer. But it doesn't mean that it's the correct one, right? And I think, linking back to what you said, I completely agree. I would argue that the better way, when you really want to utilize ML and AI in the future, is to actually have this on a platform and on a reliable set of data. I mean, ChatGPT is obviously not a finance tool per se, right? But I think that's really like that next step, where it's not just based on any data point, but very specifically structured data that actually will really help you to really automate certain, or what is the English word? Autonomize certain ways.
That's a good one.
But absolutely, I completely agree.
Yeah. And I think if you look or link it back now to professional services organization and think about their mindset, because adopting those new technologies requires a different mindset. It's easier for professional services organization to adopt, because you have a lot of high-skilled labor in there who are constantly looking for ways to optimize and fine-tune things. So there is some inherent interest to them to innovate and be cutting edge.
Right? Absolutely.
So that's probably different to other industries where you have more established routines, and it's harder for them to change.
Yeah, absolutely.
Yeah, I guess that was another okay-ish episode. Looking forward to our topic next week.
Yeah, absolutely. Yeah.
Greetings from Vegas.
Yeah. Bye-bye. See you next time.